Hello and welcome to the Orchard Lending Podcast on the 26th of June. Today we're going to look at low doc loans and alt doc loans just to mystify some of the items around them and how they can benefit you as a potential business or current business owner. So let's get into it. So first of all, alt doc, low doc loans is where you might need an alternative income verification. Most lenders, they like to see 2 years financials for your business, maybe just one, but they want to see full financials. They want to see tax returns. They want to see balance sheets, profit and loss statements, maybe a whole host of other things. Low doc, alt doc loans go, well, maybe you don't have those things at hand, or maybe they don't reflect the current state of the business. COVID, classic example, right? Over COVID, your business probably would have suffered pretty harshly. Now you're back doing great things. What's the best thing to base your business on for going for a mortgage or a business loan? Should it be the last 2 years where you were forced to possibly be shut down, or should it be the current past 6 to 9 months where things have hopefully revved up and going really good? So let's look at this. We'll just scroll down to down here. So as we said, there's one of our full doc loans. Now this generally applies whether it's a mortgage, whether it's a personal loan, business loan, internet finance. Your full doc loan is going to need these sort of documents just as a minimum, and may even need more depending on the type of finance you're going for. Low doc loans bring that down a little bit. May not need to see tax returns, alternative income verification. Maybe you get your tax through different methods that you can substantiate, but not through general methods of bank statements or tax returns. Even though we have bank statements here, these aren't necessity. You don't need all of these. These are just some of the examples of what you may need to get a low doc loan. Also on here, another thing that you could use is purely just BAS statements. We have lenders that will lend based on BAS statements, and why not? If you've submitted your last 3 to 6 months BAS statements, that's a legal document to the government saying how your business is doing. Of course, that's going to give a great idea of just how your business is going at the moment and what you can be used on. Now, when we say low doc, no doc, this does sometimes fall into credit impairment. Now, that's a bit of a different thing. That's normally there's a possible default or problems in the past with payment history. Low doc and no doc can overlook this as well, because sometimes with these loans, they'll go, well, again, what is happening now? So that's pretty much it in a nutshell. If you go to our website, we've got some more information on low doc loans here, how it can help you. Now, the thing is too, to remember with these low doc and no doc loans, it doesn't mean they're going to be charging you at shark loan rates. You can still get quite competitive interest rates on that as well. There's no normal credit checks for pre-assessment. So if you want to at least find out if you qualify and how much you can borrow, because sometimes the amount you can borrow will be the same whether you go low doc or whether you go full financials as well. Potentially it could even be higher because your last few BAS statements may actually show a higher income and revenue and profit than what your previous financials would if you were to use them as well. So there's actually a lot of benefit to going down the low doc route. What I'd highly recommend is that if you are looking at this, give us a call, text down here, request a call back. One of our credit specialists will give you a call. If you're in the Sydney area, you can pop in. We do need appointments, but you can give us a call. Fill out our form if you like. On top of that as well, we do remote credit appraisals, free rate reviews. If you've already got some finance, possibly we can see how we could help you review or refinance that rate, and even look at it possibly too that if you already are on a low doc rate, can we get you to full doc? Because there are some lenders as well that might start you off on a low doc interest rate, which is always higher than a full doc rate, right? But there are ways that we can actually move that to what we call path to prime, and that is moving you from an alt doc rate, which currently is going to be over 3%, and some of them may even be over a 4%, and bringing you back down to a hopefully competitive full doc rate, but without needing the full financials, because you may be able to prove a good 6 months history with a lender. So if you're after a low doc, no doc loan, definitely give us a call, see how we can help you, just see what type of benefit you could also see. And we can also look, even if you do have your full financials, you might say, hey, the last 3 months, the last 6 months have been way better than the last 2 years. Well, then maybe that's what we're going to use. Maybe we might get a higher interest rate, but we can allow you to borrow more, and that might fulfill your needs better at the moment as well. And that's the best thing coming to us as brokers, is that we can help you work out what's the best method and the best path for you. So give us a call, fill out our form, and we look forward to seeing how we can help you shortly.